Hello everyone. You know, the diamond industry moves in cycles. This occurred to me as I was looking through the news flow of 2024. Week by week, month by month, quarter by quarter, we start to recognize certain patterns and themes that were prevalent last year, and that gives us some insight into what we can expect in 2025. So this video has two functions. We're looking back at what happened last year, but that's going to inform us of what to expect in the year ahead, and that'll be the topic of our next video. Think of it as a two-part series putting into context our expectations for 2025. So let's begin. The tone of the diamond market in January, in general, as we'll experience in the coming weeks, is set by the holiday season that just passed. And 2024 began on the back of just an average season. Jewelry sales through November and December 2023 fell 2% according to MasterCard's Spending Pulse, and natural diamonds underperformed according to most other indicators. There were some bright spots. Luxury jewelry houses posted good growth, but overall there was caution, which stemmed from A, US retail having dipped largely because of high inflation, and B, continued struggles in China's jewelry industry where expectations were low for the upcoming Chinese New Year. And so 2024 began with muted expectations for retail jewelers to come into the polished market in a meaningful way that would stimulate trading for the year ahead. Remember, the first quarter is generally a strong period for the diamond industry as everyone comes into the market to replenish the inventory they sold during the season. And it starts with the jewelers. If they had good retail sales over the holidays, they come into the polished market, it boosts the polished market, and strong polish trading fuels demand for rough as manufacturers require fresh goods to fill the orders that are coming in from that jewelry sector. Now, it's very interesting given the current state of the market because we forget, just over a year ago, India's manufacturers put a freeze on rough imports. That was in November, December 2023. Their polished inventory was bloated to the extent that they made a collective decision to stop putting rough into their factories so they could focus on sales without adding new inventory. And in so doing, diminished the excess polished supply that they were holding. And it did help. They resumed rough buying in early 2024 with some appetite. India imported about $4.1 billion worth of rough in that first quarter. That was below the previous year, but the market was still positive in that comparable period. The $4 billion was on par with what India usually does, and in fact it was above pre-COVID levels, which has become a good benchmark in recent years. Now I know what you're asking. Avi, in the end, did jewelry retailers come into the diamond market to restock in that first quarter as you said they should? Well, to some extent they did. They did so enough to stabilize the polished market in the near term, but not enough to create momentum for the rest of the year. It wasn't sustained, as we can now say with 2020 hindsight. But we'll get back to all that trading stuff in a minute, because we're still in the first quarter, and there were other significant developments that occurred in those first 3 months of the year that shaped the market and are worth mentioning. The first of those is that De Beers Botswana subsidiary Debswana approved a $1 billion investment for the underground expansion of the Zwaneng mine. That was a forerunner to demonstrate how intertwined De Beers is with Botswana, and we'll get back to that story. The second story being that the GIA opened a lab in Dubai. Now that's significant because it's another indicator of Dubai's growing importance as a rough trading center and a polished distribution center, with more goods being manufactured in the beneficiation centers such as Botswana, Namibia, South Africa, Angola. Indian manufacturers with factories in those centers bring all those polished goods to Dubai to prepare assortments and ship to their clients around the world. And we'll make a separate video on that one day. It's a story well worth understanding. But the next development was that on March 1st, the G7 countries implemented further restrictions on Russia origin diamonds. That's rough directly from Russia and the resulting polished regardless of where they were manufactured. That initially caused some delays in Antwerp due mainly to customs officials not quite knowing what rules to implement or what was required, but those were dealt with fairly quickly. More importantly, the EU restated its plan to implement a traceability mechanism and a verification node in Antwerp, so that all rough would have to go through Antwerp first to verify they weren't of Russian origin. And that caused a stir, and it's a controversy that continues today. It made producer countries nervous, and Botswana in particular started to lobby against the move, or lobby to create an additional node in Gaborone, which the EU subsequently agreed to. Fast forward to November. In the meantime, for its part, the US required a self-declaration by the importer or exporter that the goods were not of Russian origin. The initial implementation of the sanctions brought additional questions. What about old stock, or so-called grandfathered goods? These were gradually ironed out through the duration of the year, but there are still lingering concerns about the mechanisms being implemented and how they will be implemented. But for now, our story continues in the second quarter with the bombshell announcement that Anglo-American is planning to sell its 85% stake in De Beers or spin it off in an IPO. That put De Beers under the spotlight, as it demonstrated the company's struggles to create revenue and profit growth in the last 2 years, or consistent growth over a period of time. And in doing so, it highlighted the challenges facing the natural diamond industry. In the meantime, the market tends to slow in the second quarter over the summer period of the Northern Hemisphere. Irrespective of that, though, there was a recognition that US jewelers were being more cautious in their inventory management, so they were buying less polished than expected or hoped for. Also, China remained very quiet, and we started to see that impact the luxury jewelry houses who have a large footprint in China and Hong Kong. And so that all affected the polished market. But manufacturers continued to buy rough, although there was some indication they were growing uneasy about their polished inventory levels and relatively high rough prices. They started to refuse certain high-priced De Beers boxes. Then the Vegas shows came around with their usual round of announcements, and the most notable of those was De Beers unveiling its new strategy, which saw it backpedaling on its Lightbox synthetic diamond jewelry program. It also signaled it would downsize its sightholder base, some interesting intentions to forge partnerships in the polished market, and intentions to work with jewelry retailers in marketing natural diamonds. This was kind of a beginning of the De Beers roadshow, let's say, to show potential investors that the company has a plan and contains value as Anglo plans its exit. Botswana's President Masisi was also in Vegas 4 months before a general election he was facing, mind you, and that sparked speculation that the important marketing and mining license agreements between the Botswana government and De Beers, which are now 4 years overdue, would be finalized in Vegas. It didn't happen, and it became quite apparent that the tension was growing between the parties over contentious points in the negotiations. And that atmosphere continued in the run-up to the elections, which saw Masisi unseated in late October, as we'll see a bit later. Now, the third quarter was when all the trading stuff came to a head. The polished market remained slow after Vegas, and manufacturers' polished inventory levels had grown again. Their rough buying and polished production had exceeded their polished sales in the first half of the year, and that affected the rough market. Prices at rough tenders started to drop, and sightholders were rejecting De Beers boxes. De Beers, for its part, maintained its prices, but reduced supply, as it generally does in slow markets, allowing sightholders to refuse more goods, and it cancelled its August sight. Alrosa, which also has sanctions to deal with, followed the same path, and also sold goods to Cochrane, the Russian government's gem and precious metals repository. Other companies also cancelled or postponed their rough sales. Most notably, Botswana's Okavango Diamond Company gave notice to cancel its November and December sales. For Botswana, that's important government revenue. Now, the idea was to give manufacturers some breathing room, that they can focus on increasing their polished sales, especially during the busy holiday season, and to do so without producing new polished. That would enable them to reduce their inventory so that come the new year, where we are now, they'd have an appetite to buy rough and start manufacturing again. Keep that in mind when we think about 2025. But that remained the storyline within the trading environment through to the end of last year. Slow rough market while the holiday season played out, and a focus on stimulating demand with the aim of restoring that supply-demand equilibrium and establishing a platform from which the industry could grow. But there was a stark recognition that controlling supply is not the path to long-term growth. It has to come from the demand side. And there was a sense that the industry was finally upping its marketing game during the holiday season. De Beers teamed up with Signet Jewelers, which is the largest jeweler in the United States, as you know, for a campaign to promote natural diamonds. That suggested some change in tack from Signet away from its prior embrace of lab-grown diamonds, at least in the bridal market. De Beers announced similar campaigns in China with Chow Tai Fook and in India with Tanishq. Furthermore, various trade bodies pledged to seek ways for the trade to contribute funds to the Natural Diamond Council to enable that NDC body to broaden its reach and carry out its mandate, which is to promote natural diamonds. In the meantime, we saw traceability providers marketing their services quite aggressively in anticipation of a wider adoption of source verification programs. And there were calls for greater cooperation to enable cooperability between them. That means that their systems should be able to talk to each other. That's largely motivated by the G7 mechanisms that were being planned. And there's a general movement, frankly, across all industry toward more ethical product consumption and giving those assurances. And that includes the broader discussion of sustainability and environmental, social, and governance, or ESG components. The Kimberley Process weighed into this debate, both at its June intersessional and November plenary meetings, making a play for relevance in the discussion. It adopted a resolution that allows countries to proactively list the country of origin on KP certificates for mixed parcels. Those are parcels containing diamonds from various sources, which until then would have been marked mixed, deeming them simply useless in the source verification movement. Now countries have an option to disclose their origin. The KP has also been working to introduce digital certificates which would be blockchain compatible, enabling them to be used in these traceability programs. That's under the chairmanship of the United Arab Emirates. Remember Dubai's growing importance. And the UAE somewhat significantly agreed to extend its term as KP chair to a second year in 2025. And the UAE, on behalf of the KP, has not been shy to vocalize its opposition to the G7 initiatives, arguing that they're creating a second KP system. And this debate will no doubt continue in the year ahead. The EU, meanwhile, as I mentioned before, agreed that a second rough verification point would be set up in Gaborone, perhaps giving President Masisi his final hurrah to the diamond industry as he was ousted from office in the October elections. Highly significant. The first international trip for newly elected President Duma Boko, only 1 month into office, was to Antwerp to address the diamond industry at the Facets Conference. And that at least gave the optics of warmer ties with De Beers and fueled optimism that their deal would be signed soon. And in general, the year ended with a somewhat more optimistic feel about the diamond industry. De Beers reduced its rough prices to bring its supply into alignment with the rest of the market. El Rosa did the same, and initial reports pointed to a decent holiday season, with jewelry sales up 4% according to MasterCard. The US elections fueled consumer confidence simply because there was a decisive outcome, but there's also a feeling that the US economy is in a stronger position than it was a year ago. Inflation has normalized and the Fed has started to reduce interest rates. And so that's the context in which we usher in this new year. What can we expect from here? Well, that'll be the subject of our next video. So hold your horses, I'll be back soon. For now though, let me know if I missed anything, big stories or developments whose impact will yet resonate through the diamond industry. I know I didn't speak too much about synthetics, about lab grown. Maybe that's an oversight, but that's an ongoing challenge. There wasn't one particular development that changed that dynamic. There's no doubt lab grown continues to impact the natural diamond market. Maybe we'll talk about that in our next session. Fun times. Thank you for watching if you got this far. If you enjoy my content, give it a thumbs up and subscribe to my channel. Follow me on social media. I have some personal plans that I'm excited to share with you in the new year. So stay tuned, stay connected. Happy New Year, everyone.